In the heart of America's financial landscape lies a tale of betrayal and deceit. A trusted institution, Wells Fargo, was once hailed for its stability and reliability. But beneath the surface, a dark storm was brewing, one that would shake the foundations of trust. This is the story of how millions were stolen, not by bandits or hackers, but by an American banking giant itself. Wells Fargo, a name synonymous with financial security, orchestrated a scheme that deceived countless customers and regulators alike. The scandal began when employees, pressured by unrealistic sales targets, created fake accounts under unsuspecting customer names. This fraudulent activity went unchecked for years, racking up fees and charges that lined the bank's coffers. Wells Fargo's actions were not just a breach of trust, they were a violation of public faith in financial institutions. The consequences of these actions rippled through the economy, affecting millions of ordinary Americans. Regulators, initially unaware, were shocked by the scale of fraud. When the truth came to light, it sparked outrage across the nation, leading to investigations, lawsuits, and significant financial penalties against the bank. The scandal revealed deep-rooted issues within Wells Fargo, including a toxic corporate culture that prioritized profits over ethics. Employees were coerced into unethical practices, knowing that their jobs depended on meeting impossible quotas. The repercussions of this scandal have been far-reaching. Trust in banks has plummeted, and the incident serves as a stark reminder of the potential for abuse of power within financial institutions. As we delve deeper into this story, we uncover not just the extent of the fraud, but also the lessons learned from this tragic episode. How did such a large-scale deception happen, and what changes have been implemented to prevent future abuses? Join us as we explore the complex web of deceit that was the Wells Fargo scandal, and discover how America's bank stole millions, betraying the trust of its customers and shaking the very foundation of the financial system. In 2016, Wells Fargo faced allegations of creating millions of fake accounts without customer consent. This fraudulent activity led to widespread distrust among customers and regulators. Employees were pressured to meet unrealistic sales targets, leading to unethical practices. The pressure created a toxic environment where compliance became secondary. To incentivize employees, Wells Fargo offered bonuses for opening new accounts. These incentives often led to unethical behavior and compromised customer trust. Customers reported receiving bills for services they never requested, leading to financial losses and identity theft concerns. The impact on individuals was devastating. Wells Fargo's board failed to oversee operations effectively, allowing misconduct to persist. The lack of oversight contributed significantly to the scandal's scale. In 2017, Wells Fargo agreed to pay $185 million in fines to settle accusations of fraud. Despite this, the damage to its reputation remained extensive. The scandal highlighted systemic issues within Wells Fargo. The culture of greed overshadowed ethical considerations, leading to widespread misconduct. Employees faced severe consequences, including job loss and legal action. Many felt compelled to participate in fraudulent activities to meet quotas. Customer complaints soared as news of the scandal broke. Trust in the banking system eroded, leading to significant financial and emotional distress for many. Regulators, including the Consumer Financial Protection Bureau, stepped in to investigate. The scrutiny aimed to prevent future misconduct. Wells Fargo promised reforms to address the scandal. However, questions remained about the sincerity of their efforts and the effectiveness of proposed changes. The scandal affected not only Wells Fargo, but also other banks. It prompted a broader examination of industry practices and regulatory frameworks. Internal investigations revealed that top executives knew about the fraudulent activities, but failed to act. This knowledge intensified public outrage. Public outcry led to calls for stricter regulations and oversight in the banking sector. The scandal underscored the need for accountability, and transparency. The Wells Fargo scandal cost the company billions in fines and lost revenue. The financial impact reflected the severity and breadth of the fraudulent activities. Employee morale plummeted as the scandal unfolded. Workers felt betrayed by their employer and struggled with the ethical implications of their actions. Despite efforts to reform, Wells Fargo continues to face scrutiny. Questions linger about whether the bank has truly changed its corporate culture. The Wells Fargo scandal serves as a cautionary tale about the dangers of unchecked corporate greed and the importance of maintaining ethical standards. In the aftermath, Wells Fargo launched various initiatives to restore customer trust. The path to recovery remains long and challenging. Regulations have tightened since the scandal, aiming to prevent similar incidents. Banks now face increased scrutiny over their practices and ethics. The Wells Fargo scandal impacted not just shareholders, but also employees and customers. Its effects continue to shape banking practices and policies. Whistleblowers played a crucial role in exposing the fraudulent activities at Wells Fargo. Their courage helped bring the scandal to light. The scandal's fallout included lawsuits from customers and employees. Legal battles sought to hold Wells Fargo accountable for its actions. In response to the scandal, Wells Fargo implemented new training programs for employees. These aimed to prevent future unethical behavior. Wells Fargo faced intense scrutiny from regulators. The Consumer Financial Protection Bureau imposed fines and demanded reforms. This marked a turning point in how banks would be held accountable for misconduct. Employee morale plummeted as the scandal unfolded. Workers felt betrayed by their employer, leading to widespread distrust within the organization. Many employees quit or were fired, exacerbating internal conflicts. Customers lost faith in Wells Fargo's integrity. Many closed accounts and moved their money to competitors. The bank's reputation took a severe hit, impacting its stock value and future business prospects. To regain trust, Wells Fargo launched extensive customer outreach programs. They aimed to rebuild relationships through improved services and transparency. However, recovery was slow and costly. Wells Fargo's scandal exposed systemic failures in banking oversight. The bank's actions hurt customers and eroded public trust in financial institutions across the country. Despite efforts to rebuild trust, Wells Fargo faces ongoing legal battles and regulatory scrutiny. The scandal serves as a stark reminder of the consequences of unethical business practices. Regulators worldwide now scrutinize banks more closely. This increased vigilance aims to prevent future scandals and ensure consumers' financial security and privacy. Customers must remain vigilant and informed about their finances. Regularly checking statements and understanding account terms can help detect fraudulent activities early. Transparency and accountability are crucial for rebuilding trust. Banks must prioritize ethical practices and open communication with their customers. Consumers should actively seek out banks committed to ethical practices. Choosing reputable institutions supports financial stability and protects personal assets. The Wells Fargo scandal highlights the importance of consumer education and awareness. Being informed empowers individuals to make safer financial choices. We must hold institutions accountable for their actions. Public outcry and legal action play key roles in ensuring that unethical practices are addressed and corrected. In conclusion, the Wells Fargo scandal reminds us of the need for constant vigilance and the importance of ethical standards in banking. Together, we can create a safer financial environment. Stay informed, ask questions, and demand transparency. Your financial health depends on it. Remember, knowledge is power in the world of finance. Thank you for watching. Share your thoughts in the comments below. Let's keep the conversation going about the future of banking ethics and consumer protection.